Okay, our point of reference on the crypto front would be ETH USDT. This is a call from Friday. Friday, and then price is currently slow, but it's usually expected because it is ETH. However, I'm more focused on the forex front, right? So we'll first look at Euro USD, the Euro USD futures charts. That's the CME, and then we'll look at the CFD chart. So these are previous markets that I did. So before I proceed, I want to say a very important statement that expectations are not reality. So whatever levels that I have as my POI, point of interest, right, it doesn't mean price cannot sell without tapping into the level or zone that I am anticipating. So expectations are not reality. So these are just educational purpose. Now that price has approached what we call, or what I can describe as, an internal trend line, these can also be classified as generated liquidity, because for price to change course, it needs to follow that three rules, or the three concepts, the three letter concept: accumulation, manipulation, and then distribution. So in my opinion, we've had the accumulation, and then now the manipulation to the upside, taking out the previous supply level, and then we had what I can describe as an incomplete pullback. So now I'm expecting that price, after retesting on this trend line, a lot of persons will be eager to sell, even though the sell might happen, but it can be short-lived. This is something you need to take note of. So price can do something like this. So what I mean by short-lived is that it would sell, but it probably would not sell for long, and then it will reverse, right? Giving a trader less possible outcome. So for price to continue to the upside, judging by the nature of the candlesticks that are formed, would need to see some form of pullback, and then price would make attempt to swing to the upside, and then coming back to take out this incomplete pullback as a form of what? Liquidity. So these are my expectations. Very simple and straightforward. So how do you correlate this with the CFD chart? Mind you, this is the CME. So what you want to do is to drag that same level, find it on the CFD chart. It's just that the pricing would be different. So let me take out this, because this was from the previous analysis that I did. Price came very close and missed my trigger point by probably 3 pips. Yeah. And then pushed to the upside. I was aiming for 3R here. Price gave about 7R. But it missed my entry. So, okay, 6 points. Something R. So in my opinion, now that you can say to some extent that this trend line liquidity has been grabbed, meaning it has induced impatient traders. Some persons would want to sell immediately price gets here, and because we are approaching Monday, price would respect it a bit and then swing to the upside before potentially rejecting. So it doesn't mean that it must reject from here, right? Price can trade above it, range a little bit, and then before selling off. However, what I want you to pay attention to is that from this initial zone that potentially can be a good point of interest, it doesn't mean price cannot sell from there, mind you. However, like I said, it could be short-lived, meaning it could be very temporal. Now, this is what I'm saying. Price can come here, do something like this, do something, and boom, continue to the upside. So I realistically, to cut down on my risk and then increase the probability for price to swing to the downside, I'll be waiting for price to get to this high, tap into the zone, and then sell off, right? Now, what that will give you on the weekly time frame is price will create what? Wick. That is WICK. Mind you, this is the 4-hour time frame. However, how do you find a trading area? How do you minimize this range? One way I can tell you is without, this is just basic. There are other ways. If you want to learn exactly how I trade, it means you need to, pay for that. So you can do this. You can use the Fibonacci. I'll tell you don't use the 50%, but if you have risk tolerance, you can. I'll tell you target anywhere from this 0.618 to 0.886 level, and then try and aim from that range. So using that, it falls back to what I said earlier, that this is an incomplete pullback. So it creates here as what? As a liquidity reference point. So price can trade back into this range before selling off, right? So one thing I want to make you understand, and this is a free knowledge you can get, or that I'm willing to give out, the simple way to know if price is going to sell off from any of this POI is if price creates what? A healthy retracement or healthy correction made up of what? The buy and sell participant. It gives you a stronger reason to want to take a short. However, if you see something like this, and boom, an impulsive move to the upside, there is a high probability that this sell reference point will not hold. So it can do something like this, and then boom, push to the upside. Do you get? So take note of that, and cheers.